So to do the fundamental sustainable growth analysis for Coca-Cola, the first thing I need is the consolidated net income. Well, I'm going to work with the 10K, the latest 10K we have, and then and click this little button so that that 10K appears on all of these windows. And you'll see why we have multiple windows in just a second. The first thing I have to do is pick date of analysis. So I'm going to pick two dates, December 31st, 2011 and December 31st, 2010. And so the way I do the dates is I simply catch this date and I drag it and drop it in here. And then you can see that it has the software has set up all these fields for me to enter data into. The green fields are inputs. This is information that comes from the financial statements, and later when we come to price ratios, it'll be market data as well. And then the blue fields are calculated values. So you can see that the first thing I need is consolidated net income, and so here I have to pick the income statement, or sometimes called the statement of operations. These things will differ across companies, and I go down here and I look at the consolidated net income. It's 8,634 million, so just over 8.6 billion. And I take this number and I drop it in here. Okay, so that gives me, and so since I'm already on this on the sheet and on this cell, I can quickly do the 2010 one as well. The next field we require is the net income attributable to non-controlling interest, and Coca-Cola reports it as an actual field. Some companies don't. They simply report the net income to shareholders, in which case you would put that field in here and leave this at 0. So let me drop this in here. So that's 62 and 50. And then you can see it calculates the net income to shareholders. The next field is the average shareholders' equity. Well, this comes from the balance sheet. Why do we use the average? In our, as explained in the online text, when we do flows over stock, so a flow variable like net income versus a stock variable like shareholders' equity, we tend to use the average shareholders' equity, so beginning of period plus end of period divided by 2, simply recognizing the fact that the net income is generated through the operating period. And so kind of a more accurate measure is for the denominator here is the average shareholders' equity. Okay, so to get the average shareholders' equity, I go down the balance sheet till I come to this part, and it tells me that the equity attributable to shareholders of the Coca-Cola Company in 2011 was 31,635. So I drop it in here. Now I'm going to take the average of that and the 2010 number, and the way I do that is I take this number and drop it into the same cell. And then if I go over here, you will see the cell editor. If I click on the cell, it tells you that I have two numbers in here, one taken from 2011 and one taken from 2010. These are the two values. And to take the average, I simply click this little mu button, and you'll see that it changes the formula to the average and puts the average in here. Now the next thing I have to do is for 2010, so now I need not just the 2010 data but also the 2009 data, which comes in the previous 10K. I go there, I select the balance sheet, and I go down to the equity attributable here. This 31,003 is the same number as here. I put that in here, I put that in here, and then I average these two fields, and I have the average shareholders' equity beginning of period and end of period in 2010. The last thing I need here is an input as dividends paid. That comes from the cash flow statement. So I go to the cash flow statement, and I come right down here. Down here somewhere will be the dividends. Here it is. I drag this number over here. Now one thing you will notice is that as soon as I drag it, the dividend payout ratio became negative. That's because the software is expecting this to be a positive number. Some companies report dividends paid as a negative number, some report it as a positive number. We make the convention that it's a positive number. It's usually fairly easy to figure out the convention. And so you'll see in the cell editor here, which is that we click the minus sign and it makes it a positive number. And now I repeat this for the dividends of the previous year, change its sign, and I'm done. So I have computed the dividend payout ratio, the retention ratio, the ROE, and the sustainable growth for Coca-Cola for 2010 and 2011. Now, throughout the process, you can see all of the little steps involved, which is locating the statements, locating the information in the statements, excuse me, and putting it into the calculator. When I finish with it, I can click a chart, and a chart will come up, and I can, for example, plot various things. I could plot different things, and of course, if you plot too many things, you'll have too many charts. But you get a quick way to look at what's been happening with the various dimensions for Coca-Cola. And you'll see here there's only one company. If I had constructed this for more than one company, the other companies would have appeared here, and then you could compare the companies graphically in this way. Some of the other elements here, this turns on self-assessment mode, and that's discussed in a separate video. This simply changes the order of the column. So if I didn't want to go from most recent to the last oldest one, I could click on this column and move it. This clears out entries. This deletes a column. This is a very useful little icon here, which is once I've done average shareholders equity for one of these topics, if I need it again, so for example, if I go to this other topic and I create the date columns, if I click this, it'll take my previously computed values and fill them all in. So you can see the net income and the shareholders equity came in. All I need to add now is the average total assets to complete this. The next button is the report button. It tells you everything you did. It tells you the calculations at the top, the summary calculations, and then every little piece that went into your construction. Okay, you can save the data, you can copy everything, and you already saw charts. Some other features are examples. We have an example data set. It's only one company, when you bring it in, it'll fill in every little topic for you, so you can see what the finished product looks like. There are various other options which, as you start to use it, will become more evident. There's one thing I do want to point out, that